had a discussion with a trader the other day, and he was asking me about the origins and how I came up with the Bollinger Band differential oscillator and exactly what it was and what it did. And so I thought it might be interesting to do a short little video, and I don't think I've gone into this detail before about the Bollinger Band differential oscillator. In any event, what you see here are the Darrow-Guppy multiple moving averages. And some years ago, Darrow-Guppy, who's an Australian trader, came up with the idea of putting 12 moving averages on an equity, and each one of these moving averages, and they're exponential moving averages, has a different length, and the shorter ones are the gray ones up here, and the longer length ones are here. And there are some traders who still trade using these multiple moving averages as determining when a trend begins and when it comes to an end. And so I kind of like the idea of the multiple moving averages, but I don't like, or I didn't like, the clutter that they put on the chart. And it's difficult to put other indicators on the equities when you've already got 12 moving averages on there. So that's where I came up with the idea of boiling all of this down into just a couple lines, and that's what brought about the Bollinger Band differential oscillator. And I'll show you in just a minute how that coincides with the Guppy multiple moving average. Now here I've put the Bollinger Band differential oscillator on the screen with the Guppy moving averages. And so you can see on the left here, number one, how the Bollinger Band differential oscillator is compressed right in here. The Bollinger Bands are in a squeeze in the same way that the moving averages come together down here and kind of squeeze together. So what I did is I boiled all these moving averages down to just simply one indicator line and then a zero line. The zero line represents all these red moving averages here, and the indicator line represents all the gray moving averages in here. And then I put this within Bollinger Bands in through here. So you can see right here, number two, when this moving average starts down and the equity just starts down here, you can see the indicator line of the Bollinger Band moving average is starting down through the Bollinger Bands right here. So it starts very early right up in here, and then as this kind of flattens out here, this indicator line goes to the bottom of the Bollinger Bands. And even though there's a little bit of an upturn here, it stays in here and stays right on the bottom band of the Bollinger Bands from here down to here. Now you can see these red moving averages here is how the equity moved below them for one bar. And as I said, the zero line represents all of these 6 red moving averages. And at number 3, where it moved below it, you can see the indicator line just touched below the zero line right here, which coincides exactly with this. And you can see number 4 over here, the equity kind of hit support right in here, and then it started down. When it started down right in through here, that's when the indicator line started down through the zero line. And with the Guppy multiple moving averages, when the equity moves below these longer term moving averages, that represents a downtrend, in the same way that when the Bollinger Band differential oscillator moves below its zero line, that indicates the equity is in a downtrend. Now you can see over here, it started up here, and the indicator line moved above this upper Bollinger Band level here, and it has a color change where it turns to yellow when it does that, but it's still below the 0 line. So you can see here this was still below these red moving averages here, and it crossed above, the equity crossed above the red moving averages right in here, and that's exactly where the indicator line of the Bollinger Band differential oscillator crossed above its 0 line here, indicating the beginning of an uptrend right here. So if any of you who are watching this video happen to really like the Guppy multiple moving average, if you like that, then you should love the Bollinger Band differential oscillator, because it makes it very easy, very clear to see, and eliminates all of these 12 lines that are cluttering up the chart in through here. So I don't think the Bollinger Band differential oscillator gets as much credit as it deserves, but it is a very useful indicator, and I think you can see in this comparison how useful it is.